Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. I'll speak about the general trade setup. And it does not look good at this point of time. The Nikkei is down almost 1.5%. The SGX Nifty is down almost 56 points. So the selling is definitely there as far as our markets are concerned. As far as the ADR pack is concerned, there was selling there. Apart from Infosys, which ended flat in trade, most of the other ADRs were down in trade. So Tata Motors was down 2%, Wipro was down 2%, HDFC was down, or HDFC Bank was down almost 2%. The only saving grace was Infosys, which was flat, nothing compared to the 2% move that we saw on the IT sector as far as our markets were there. Now, as far as crude is concerned, crude is trading weak. It's down almost 1%, both for the WTI as well as Brent. So there is definite weakness that's coming in on the crude. Base metals on the LME had a mixed closing. If you're looking at most of the base metals, they had a mixed closing. So aluminium and copper were up in trade. Nickel was up in trade. Tin was up in trade, but there was heavy selling that was going on in lead. Zinc was flat in trade. Now, markets in Shanghai have reopened today. Not very positive cues coming in on the commodity side. Zinc, aluminium and steel, all three are down anywhere between 1 to 1.5%. As far as precious metals are concerned, trading very, very flat. Gold is flat in trade, but there was a little bit of selling pressure seen in silver, platinum and palladium. Now, with every rise in the market, FIs is using that opportunity to sell in the market. They sold it 1,200 crores in the cash market. DIs bought in 1,300 crores in the cash market. So overall, FIs in this month have sold in 6,000 crores and DIs have bought in almost 11,000 crores in this cash market. Now, which were the sectors which did well, which didn't do well? The broader markets were rather flat in trade. The Nifty Bank ended with a positive bias. Apart from it, if you're looking at the India VIX, that fell in almost 6%, given the fact that the market was rather stable in trade. The big outperformer was the Nifty IT, which was up almost 2%, and the big drag was the Nifty Pharma, which was dragged down by Sun Pharma, which was down almost 2% in trade. Overall, what contributed on the positive side? TCS and ITC, and on the negative side, it was Sun Pharma and IndusInd Bank, which contributed negatively. But Agam, what's the view on the FNO side?
Well, consolidation continues on the Nifty, currently just short of 10,400. There's unwinding in the Nifty futures as well as the Nifty Bank futures, which is because of the expiry. So as you can see, we've seen very little change in the underlying indices. That said, if we move on and take a look at the India Volatility Index, that's fallen as well below the mark of 16 now. And when it comes to the put-call ratio, not too much has changed there, either at around 1.17. Rollovers currently standing at around, nearly 40%. That's largely in line, but we'll have to see whether or not they actually pick up eventually. There you have, that's the rollover picture. But, coming down to your options, what we've seen is unwinding in the 10,400 call, and that's what stands out among the most active options in yesterday's day of trade. Moving on, we have Dish TV, which moves out of the band, so expect a trade to resume to normalcy. But we are keeping an eye on Reliance Naval, which has seen fresh longs, along with Mindtree as well, which has also seen fresh longs. So plenty of stocks to keep an eye on. We'll also be watching out for where this takes us when it comes to the markets, at least as far as the SGX Nifty is concerned, while looking at a little bit of a negative opening. That said, to address something what's happening in the American markets, the U.S. central bankers are growing more positive on the economy, and the FOMC minutes released last evening sends a strong message that substantial underlying economic momentum could mean additional rate hikes this year. And a number of participants, in fact, have marked up their forecast for the U.S. economic growth. Bloomberg's Chris Condon reports.
A somewhat hawkish set of minutes for the January FOMC meeting. A number of FOMC participants said they had already upgraded their forecast for GDP growth in 2018 when they met at the end of January. Why? Because of quickening economic activity in the U.S., a brightening picture on the global outlook, and because of the tax changes that appear or may appear to be having a greater impact on the economy than originally anticipated by Fed officials. Now, you'll recall that in the January statement, the Fed held back from changing its line on the balance of risks, but a number of the committee members were edging in that direction. So what did they do? It seems there was a compromise here. They did not change the balance of risk statement, but they added that word further a couple of times in the statement that we've spoken about a lot. So that change was explicitly in the context of the brightening outlook that FOMC officials have for growth in 2018. And for that, they said, quote, they agreed to update the characterization of their expectation for the evolution of the federal funds rate in the post-meeting statement to point to further gradual increases. So it seems clear that this was a half step by the committee in January, not a full step towards signaling a quicker pace of increases, but a half step.
Okay, the big Nifty changes have been announced, the rebalancing. 3 stocks are included and 3 stocks are excluded. So what's coming in? Bajaj Finserv, Grasim and Titan come in. Grasim makes a re-entry back into the Nifty post the entire deal. It was excluded because of the merger with Aditya Birla Nuvo. So it's back on the Nifty. Or what goes out, Ambuja Cement, Aurobindo Pharma and Bosch. Bosch and Aurobindo Pharma were recently included in the Nifty. Ambuja is there from a lot of years. So Ambuja finally goes out. So the weightage of cement actually drops significantly on the Nifty. Now the next 50, which is basically the Nifty Junior, which is included AB Capital, Ambuja Cements, Aurobindo Pharma. These two move from the Nifty to the Nifty 50. Bosch also moves from the Nifty 50 to the Nifty Next 50. GICRE, you have L&T Finance Holdings as well as SBI Life. So this is basically what has come in. What has been excluded is Bajaj Finserv, the Glaxo twins. Glenmark goes out. Bajaj Finserv is excluded because it moves to the Nifty. The other companies are Titan, which moves to the Nifty. Tata Power and Torrent Pharma are also excluded from the Nifty. So this is broadly the scope of what's happening. Now let's take a look at the weightage. Now the weightage of financial services even increases further because you have Bajaj Finserv coming in. You have energy, which actually remains at almost 15%. IT, consumer and auto. So this is basically the broad contours of how the Nifty will shape up. Metals, construction, pharma, cement and telecom. Pharma falls because of the exclusion of Aurobindo Pharma. Auto drops because of the exclusion of Bosch. Media and services have negligible weight on the Nifty. Now let's take a look at in terms of the weightages that is there. So basically, if you look at which are the weightages that will come in. So basically, if you're looking at some of the counters that will come in, why is this important? Given the fact that a lot of global funds map their portfolio to the Nifty itself. So till April 2nd, when the rebalancing will take place, these funds will have to sell the counters which are excluded and buy the counters which are included on the Nifty.
Stock of the day is Gateway Distriparks. Now there the promoter has been upping the stake in the company. The last Paldi that we had, we saw the promoter actually holding in 0.6% stake in the company, buying 0.6% stake in the company for a sum of around 12 odd crore. Separately, the promoter previously has bought in 0.92% stake through open market purchase as on Feb 20. If you look at the shareholding pattern that we have back as per the BSE filing, promoter as per the December quarter holding stood at 26%, while the public shareholding stood at 74%. In terms of key investors, we have Amansa Holding, which holds more than 8.5% stake in the company and has been gradually upping its stake in the counter. Just to give you a little background about the company, it's a transport logistic company with a market capitalization of around 2,164 crore. It has 3 verticals: container freight, inland container and rail transport, and virtually it's a debt-free company. It has a low return of equity that it has seen for past 3 days at 9.32%, but however has maintained a good dividend payout ratio. In terms of the consensus rating, most of the analysts suggest a buy for this counter. 16 say a buy, while 4 say a hold, and just 1 analyst actually suggests sell. And if you look at the stock performance of the company, though for the last 12 months the company has just fetched a return of negative 18.3. We are expecting a return potential going forward to as much as 26% as per Bloomberg consensus. With that, let's toss it over to Jayesh for commodity market updates.
Thanks for that, Nikki. Let me start off with oil prices, which are trading more than 1% lower in early Asian hours. Now, this is on the back of the OPEC reassurance. Despite the OPEC reassurance, the market is still not confident of the U.S. output growth story, and traders are keenly waiting for the weekly inventory data. We also have a note from Bank of America, which says that they are expecting Brent crude to trade in the range of $50 per barrel to about $70 per barrel going into 2023. Moving on to the base metal space, the LME base metal index snapped its two-day losing streak and ended about 0.4% higher. Copper rose for the first time in 3 days. Now, this is on the back of Glencore, which has made a comment saying that the market will largely remain substantially in supply deficit mode, and that's the reason we saw some gains come about for copper. We also have a note from JP Morgan in which they say that inflation has come back, and that should be good for commodities. So, you know, more and more positive news coming in for all the commodities, the base metal space especially. As far as other base metals on the London Metal Exchange were concerned, nickel, aluminium and tin gained, while we had zinc and lead, which dropped on the London Metal Exchange. Moving on to the precious metal space, gold has actually stabilized near the 1325 mark. Now, this is on the back of Federal Reserve meeting minutes, which showed that there is increasing confidence in the US economy.
Well, amongst the stocks that we are tracking today is Glenmark Pharmaceuticals, which has signed a pact with South Korean-based company SCD Pharmaceuticals, and they will be together developing ophthalmologic products. Now, they will be developing 6 drugs which will be for the markets in US and Canada. Now, under this agreement, SCD Pharma will manufacture these drugs, whereas Glenmark Pharma will have the market authorization and will commercialize the products in US and Canada. But the first of the 6 ANDA filings to start, expected to start only in the first half of 2019. So not a really positive or significant reaction seen here, given that this is a while away. That apart, we're also watching out for Hatsun Agro, where the board has given an approval to raise up to 550 crores via rights issue. We're also tracking Scient. Now, the company has given an approval for reduction of the non-resident investment from the current 100% to 49%. So watch out for this stock as well. We're also looking out for Mahindra Logistics. The company has said that they have opened their largest multi-user facility in Chakan in Pune. And that apart, we're also looking out for Jammu and Kashmir Bank. Now, this is according to a ET report, which has said that the bank has disclosed having exposure to Mehul Choksi's Gitanjali Gems, and they are yet to take action to recover dues of close to 152 crores. So you might see some negative reaction there. Indiabulls Ventures is yet another stock where Valiant Mauritius Partners has bought 0.7% stake via bulk deal yesterday. So you could see some reaction there as well. So those are the stocks that you need to track and trade today.
The Central Bureau of Investigation Special Court said that the 6 people which were arrested on Tuesday night will continue to remain in the remand custody of the CBI till the 5th of March. And the public prosecutor argued that the 2 people that were arrested in the Mehul Choksi case, that is Nitin Shahi and Kapil Khandelwal, who are both employees of the Mehul Choksi group, were part of the modus operandi and had availed facilities of foreign letters of credit and letter of understandings, and will need more time to interrogate the 2 people arrested in this case, as there is a wrongful loss of rupees 4,886 crore. While the defendant's argument was that all the documents have been submitted and the 2 need not be kept in jail for further interrogation. In the Nirav Modi case, however, the public prosecutor argued that Vipul Ambani, who was the president and finance who was in fact the head of President and Finance at Firestar International till November last year, was aware of all the transactions with Punjab National Bank officials, even some of whom are at the head office level. However, the defendant argued that he was not aware of any of these transactions. Now, Kavita Mankikar and Arjun Patil, both from Nirav Modi Group companies, also played a key role in applying for LOUs, and records were found at their office. The public prosecutor argued that the bank has already incurred a loss of rupees 6,000 crore and this amount could go up further, while the stock market has already seen a loss of rupees 49,000 crore so far.
Today, 4 accused in the case were produced before the court, 3 private persons, out of which 2 were represented by me, and one of them was a lady. The court, after hearing the arguments of both the sides, have been pleased to remand them to the police custody till 5th March. 5th March, they shall be produced again. We have also moved 2 applications. One application is regarding that whatever seizure CBI has made, a copy of the same is to be given to us. And second application is that 2 servers of the company of Firestar, one is sealed and one is taken away by CBI, because of which the functioning of the company has stopped. So these servers should be restored, and we do not object to that CBI may have a clone copy of the same, but they cannot seal and stop the functioning of the company.
Pratt & Whitney, the American engine maker, is proposing a new fix to its engines on Airbus A320neo planes. The last issue, which came up about a week back, forced grounding of several aircraft across the world, including 3 by Indigo, which is the world's biggest customer for the plane. Now Pratt & Whitney is proposing to replace a new engine seal with an old one, which will get its planes flying for a time being. It's not a permanent fix, but a temporary one, but at least it will get the planes flying. And the European Aviation Safety Authority has already approved this fix, and sources tell us that this will result in all the grounded planes flying again in the short term.
On the big brokerage calls for the day, first we have is Credit Suisse on Britannia. Now, the brokerage has initiated coverage on the stock with an outperform rating and a target price of 5,550. Now, according to the brokerage, Britannia is well positioned to consistently gain market share, and they're expecting the market share to gradually increase from 32% to high 30s. Now, this will be mainly on the back of increasing share in the Hindi world because of the distribution expansion, also because of launch of premium products, and because of the shift from unorganized sector to the organized sector. Now, it is expecting its revenue to grow at a compounded annual growth rate of 13% over FY18 to FY20. Also, the brokerage is expecting margin expansion to restart as input costs are coming off and the cost savings have been seen on the company side. Now, they're expecting the margins to expand from FY19 itself. Now, lastly, the brokerage is positive on the company's non-biscuit segment for the long run, but is concerned about the dairy segment of the company. Second, we have Credit Suisse on Escorts. Now, they have maintained the outperform rating on the stock with a target price of 1,040. Now, their dealer checks suggest healthy demand trend in tractor. Now, they are seeing a strong offtake in the month of January, which is usually a lean month for tractor offtake. Also, according to the brokerage, the dealers are expecting this momentum to continue for the next few months. Now, dealers have also acknowledged the positive changes in the company's functioning over the past few years. Also, Escorts tie-up with the DLL group is helping the company gain more volumes. Lastly, the brokerage is preferring Escorts on the back of tractor demand, margin expansion and attractive valuations.
If the scam started in 2011, then we should have a clear picture of how many letters of undertaking were issued between 2011 and May 2014, which is when UPA was in power, and how many LOUs and amounts of money involved were issued after May 2014. This will clearly indicate the involvement, if at all, of the two governments. The second point is that for the Congress to say that the finance minister and the Prime Minister are personally involved is completely erroneous, because, again, as I have said, no Prime Minister certainly and no finance minister even would ever be able to supervise the day-to-day functioning of a bank or any other institution under his control. But still the fact remains that the Prime Minister and the Finance Minister of the day are responsible constitutionally for whatever happens under their charge. So therefore, as far as Parliament is concerned, as far as our democracy is concerned, it's the government of the day and the minister in charge who is answerable to the people of the country. But it is only an investigation which will establish whether anyone was personally involved at the political level, either in the earlier regime or today.
No, absolutely. And in this article that you're talking about, the one you wrote for NDTV, Mr. Sinha, you also talk about your own experience with the Ketan Parekh scam. You also talk about the Harshad Mehta scam and how you as finance minister were held responsible then. What struck me reading that bit in your article is that so many years on, we're just seeing more and more scams. If steps were taken then, would things have been different today?
Let me tell you about the 1992 Harshad Mehta scam. I was part of the Joint Parliamentary Committee which inquired into it, and it was a committee which, under the leadership of a congressman, did a splendid job. We made a series of recommendations about improvements to be effected in the banking system as in many other areas, in the stock market and other areas. Now those recommendations were wholesome and they were implemented by whichever government was in power. I remember when I took over as finance minister in 1998, there were some recommendations which had still not been implemented, and I saw to it that they were implemented. But despite the implementation of those wholesome recommendations, the Ketan Parekh scam took place in the stock market with the involvement of some banks in 2001. So clearly the scamsters, the fraudsters are one step ahead of whatever arrangements you might make to prevent frauds. And that is something which has to be kept in mind. And therefore there is a need to keep a constant watch on the systems which are in place so that nobody can take the system for a ride.
You know, a little more on the political angle of the PNB fraud case so far. Clearly the opposition right now is making every attempt to try and make it stick on the current government, which I'm assuming any opposition party would do. The government is trying to deflect it. But do you think it will really make any difference politically to the BJP and to the Modi government?
Well, I think it will be childish to think that it will not. It certainly will, because, you see, let me make a general point. Every government and every political party is judged by the electorate, not by the standards of others and not by the performance of an earlier government. They are judged against the promises that they had made. Now, we had made a promise, a very important promise, which was a very important plank of our campaign in 2014, that we will run a corruption-free government. And there is a famous saying of the Prime Minister that na khaunga, na khane dunga. Now, people are making fun of it and they're saying khane dunga, bhagne bhi dunga, that kind of thing. So we cannot escape the responsibility that this scam took place when we were in office for the last, or we have been in office for the last 4 years. It might have started earlier, but why was it allowed to continue? That is point number one. Point number two, which we have to keep in mind as a political party, is that we cannot claim that we unearthed the scam, we uncovered the scam. Why did it take us so long to do it? And let's also not forget that the first information report, the FIR registered by the CBI, does not take us back to 2011. It talks of 2016 and 2017. So clearly it falls on the government of the day, and we have to acquit ourselves by whatever action we can take to ensure that our image remains clean.
Well, you find that entire conversations and several other stories on the PNB fraud case on the website bloombergquint.com. You'll also find all the live market action right here on Bloomberg Quint Live. There are several stories apart from that that you should consider reading on the website. Here are just a couple of them. Bank of Maharashtra will recall nearly 1,500 crore rupees of perpetual bonds or additional tier 1 bonds as it looks to retire expensive debt and replenish its risk buffers. The Mumbai-based bank will recall the notes on March 17th ahead of their call dates in 2020 and 2021. Now, remember the announcement from a little over a week back that related to sharing of information by Indian stock exchanges? At the time, they decided to curb all licensing agreements and stop offering live prices to international exchanges. Well, the Indian stock exchanges have assured their international counterparts of an orderly transition. In a joint statement, the BSE, National Stock Exchange and Metropolitan Stock Exchange said that steps would be taken to ensure that the ending of licensing pacts do not disrupt the markets. Well, that's all you need to know going into trade today. Indian Open is up next though, and it'll take you through Market Open. Thanks for watching. This is Bloomberg Quint.